The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have a special gift for you folks today at TFNN. We've got Norm Winsky on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning to you, and you're going to share with us some key times for today, and I guess you're going to be our guest tomorrow on the pre-eclipse day. Is that correct?
That's correct. Can't get enough of you, Larry.
Oh, we love having you, Norm. So why don't you tell us these times that you're looking at for today?
All right, before I do that, I would try again. My tongue got tied. I would be remiss if I didn't mention the huge stuff that's happening last night and today. So I'm just going to mention this real quickly. We'll go into more detail when I'm on your show tomorrow.
Take your time because this is important. Go right ahead.
Right. So last night we had one of my top things is when the planets get to 0 latitude. I'll remind the new folks that as the planets go around the sun, they are like horses on a carousel. Not only do they go around and around, they also go up and down. When they get to their midpoint, that's called 0 latitude. That's a very powerful point. Right next to it, in midday today, we have Jupiter turning direct. That's my other category of top-notch stuff. So have two huge things. You might have noticed it overnight. There was a spike last night in the S&P. It got to, I think it was, it's coming to me, 27.97 and change, I think, on the futures there. So
that was a new high.
What's that?
That was a new high.
Yeah, that we're very close to getting to the magic 2,800 level, which is one of my key price levels in this time window. Okay, so keep that in mind. Now, that complicates maybe the intraday trading a little bit, but we'll go through it. And if you have a way to do a screenshot, I would recommend doing that now. And then I'm going to go through these. For those who can't do that, I'll dictate what we have. Okay, number one. These are all Eastern Daylight Time, by the way, on New York time. So there you go, U.S. time, Eastern. 9:49 a.m. I'm going to give that a half a star. Okay, I have a power reading. Okay, this is not written in stone. It's sort of a general guideline. Sometimes the little guys will end up being the high of the day or the low of the day, but it's just a general guideline to what to expect. 10:04, I'm going to only give that a quarter of a star. 10:52 a.m., I got that 1 star there. 11:05, we're going to give that a half a star. Now it gets interesting. Middle of the day, it may be the most powerful window of the day, theoretically. 12:28 p.m., that's 2 stars. Then here's your big one. Here's Jupiter going. I'm going to tell you, I'm going to give you this what it is here. Jupiter turns direct at 12:38 p.m. That's your 4 stars. That's your biggest event of the day. Normally, you would not, if you understand the theory behind this, that's like a big ship turning, and all these others are like little speedboats turning, and therefore your window of resolution is going to be much more precise with the little guys than with the big guys, but occasionally I've seen the big guys do a little tip of the hat there at the exact projected time, and then go on to do their, make the big high or low for the 1 to 2 day window, Okay, moving on ahead, we got 1:24 p.m. That's a half a star. 1:26, there's a 1 star. Might want to note that those are only 2 minutes apart, so you might be able to treat those as like one window, one more powerful window, or you might get a whipsaw there, 1:52 p.m. That's a half a star, and then probably one of the more powerful ones of the afternoon is at 2:17. We have 2 stars. And then we are right on the closing New York bell, 4 p.m. We have 1 star. Here are the rules of the game. I recommend using these to trade the S&P E-mini futures. You might want to try this on a demo account so you're not risking any money. Monitor with a 1-minute bar chart. Buy on weakness or sell on strength at the key times. The less you think, the better you'll do. So try that out. Just be a good robot. I'm very serious about that. I know you and I
I
laugh
know you
about
are.
that.
I know.
But I want to get that point across that don't, if you start throwing in moving averages and oscillators, all this other stuff, you'll probably mess it up. You'll find out that just go do what the planets tell you to do and what the market tells you to do. So if it goes down into a time, look to buy it within a couple of minutes of that time. Usually accurate within 5 minutes. If not effective, by the way, the more stars, the bigger the stars here, you might want to expand your window slightly to allow a little for a big event. But most your 1 and 2 star things are 5 to 10 minutes maximum. Most of these things are usually accurate within about 3 minutes. If not effective within 5 minutes, exit the trade or cancel signal. About 10% of the time, the market will form an inflection point at the key time, which will require going with the ensuing breakout. Power level, each star represents the size of the cycle. Allow up to a 5-minute window for each star. Okay, well, that's pretty much it. Larry, any questions? Oh, let me show the folks how, if I get lucky here and hit a few of these, they might want to contact me. Right? I put my reputation online. You might cancel me tomorrow, right? There you go.
No, there's not much of a chance of that, but go ahead.
I know we're just joking around, really. Anyway, so here we go. I'm in sunny Florida. We got plenty of sun in the summertime. It's plenty hot here. Not as hot though as up in the north there in Chicago and places like that, where I used to live. And here we go. Here's by the way, speaking of Chicago, I'm a former Chicago floor trader. Did that for 12 years. I've been studying the markets for over 50 years. Started when I was a teenager. And now I'm 67, so I got a little bit of experience, studied this stuff a little bit, so be happy to share that. And I offer a free class every month. I have free individual classes that run about 5 to 6 hours, and I show you all my forecasting methods as we go through my letter. So contact me right away so we can get you in the line for the next group of classes, which will be in early August. I usually get a lineup there, and I can only do about 6 or 8 people a month. So it's very tight, very short line. Contact me right away. Phone number 239-594-3939. You can email me. There's my email. That's nwinsky at embark, EMBARQMAIL.com. Or you can call me on Skype at norm, NORM, WINSKI. Any comments or questions, Larry?
I think you did a good job, and if you get some of these right, we might have you on again. So we'll see.
That'd be great.
We'll see you tomorrow, Norm, at about the half-hour break tomorrow. How's that?
Yes, sir. Then we'll have more of the big picture and a follow-up to what happened with these intraday times.
Okay, thank you so much.
Right, everybody have a great day. Thanks a lot.
You bet. Norm Winsky of Astro Trend, Naples, Florida. Okay, folks, we're going to take a quick look here at this DAX 100 here. Uh-oh, we've lost the connection. This is not good. Dear, I don't know if anybody can hear me or not. 10-4, 10-4. I don't think we have it, do we? Do we have it going on? Yep, I think I'm okay. Yeah. Hopefully, good. Sorry, folks. I saw something pop on the computer. It must have been Norm hanging up. So we got a break here. We'll come back and we'll discuss this DAX chart that I've just posted, and we'll take a look at that.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we take a look at the DAX. As you can see, we made a small bearish Gartley here yesterday on the 4-hour chart. If we switch over and take a look at the FTSE, which is in the news all the time now because of the political things that are going on, you can see that we're very close to making a Gartley sell pattern in that one also. In fact, we're almost there as we speak right now, so sort of pay attention. It's amazing here that these political things that go on. I guess it's, well, let's get off the soapbox and talk about something fun. I'm going to change the protocol here today because I get tired of putting up charts and just talking about the patterns because nothing really changes in them sometimes. And we'll talk about the ones that are important a little bit later. But the real key, if you're going to be trading, folks, and believe me, I worked here in my office with Mark Douglas for 2 years straight every day, and that was including the weekends as he was writing his book, Trading in the Zone. And we interviewed, well, Mark interviewed so many traders that would come in and visit us. And it was really amazing to see the differences in the styles that they had and why they were successful. But the main reason why most people are unsuccessful, the first thing is they have lack of knowledge about the markets and how they operate. That's just normal because it's a different business. It's not like being a plumber or electrician or a chemical engineer, anything like that, or a pharmacist. It doesn't make any difference. Those rules are different than the ones that we have for trading, and there's no universities to go to learn how to do this. The second thing that is really important why people lose is poor money management. Mark studied over 10,000 customers at Merrill Lynch and determined, why they lost. And, most of the times they would put their stops in too close, or they wouldn't use stops at all. Those were the two reasons why they usually lost. And third, which they usually get, is a lack of a trading approach. That's why people just get started in the business. They always talk about, 90% of the people who get started lose. Well, that's true. But those people that stick with it over a period of time, 3 years, 2 years, 5 years, whatever that time frame is, they will make it. And that's the whole thing that you have to do. But you have to be able to, develop some skills, and those skills are based on the belief structure of what you're looking at, whether it's a moving average or MACD line, whatever it happens to be. You have to follow these rules that you set up for yourself. Otherwise, you don't have any structure, to really to have any type of repetition in the markets. We already know from Dr. Lowe's book, the non-random walk down Wall Street, that these markets repeat over and over again. My goodness, we see this every day here on my show because, all we're looking at are these triangles or ABCD patterns everywhere. Now, we don't count them like Elliott wave people do, but they're the same thing. They're either expanding or contracting, and sometimes we give them cute little names like butterflies and Gartleys and 135s and things like that, but they're nothing more than triangle patterns. And what we're trying to do is to find a spot within that triangle pattern that gives us a really good place to either be a buyer or seller. Now, within this framework, we are faced with some really tough decisions, and they're based on FEAR. False evidence appearing real. That's an acronym that I got from Anthony Robbins 30-some years ago. And believe me, folks, all of our frustrations in the market come from expectations that we thought were going to happen. Like we thought gold was going to happen, or we thought the stock market was going to go up, or whatever it happens to be. And these are true in life too. You have expectations on your spouse, you have your expectations on your children, expectations on politics. I mean, all of these things, cause this to, really cause a problem with your trading. And if you remember, those of you that have spent a lot of time reading Mark's books, especially, the two books, the Disciplined Trader, and then also, Trading in the Zone, he talked about the four major fears that we have in the market. The first one is the fear of being wrong. Folks, you got to get used to that one right away, because you're going to be wrong a lot in this business. You're going to be right a lot too, but you're going to be wrong a lot. So you got to remember, fear of being wrong. There's nothing wrong with that. As Tudor Jones says, there's nothing wrong with being wrong. It's wrong if you stay wrong. You don't want to stay wrong. So you got to be able to change your opinion. So keep fear of that. The second one is the fear of losing money. That's another one you've got to get used to. Stop and think of that. If you have the fear of losing money, I mean, you're going to lose. I mean, even a golfer doesn't, hit scratch all the time. A baseball player doesn't hit the ball all the time. The basketball player doesn't make the baskets all the time. The doctors don't cure the patients all the time. So you have to be realized that losing is just like breathing. It's going to be something that you have to do it. The real key is determine how much you're going to lose and stick to that, because you only have to be right about 50% of the time, and you'll be far better off than if you try not to be perfect, because there is no perfect in this business. That's absolutely for sure. Now, the third fear is one that we all experience, and that is the fear of missing out. The market goes up and, up and up and up, and say, finally, I've got to get in. Please let me in. Well, that'll be the high. You can put your last penny on that one, because that's usually the case. My good friend and mentor, John Hill, used to tell me about stops. He said, don't be concerned about putting your stop in. You're going to get filled on the high or low tick anyway. So just put it in and get it over with and move on to the next trade. And so many times that is absolutely the case, because when you get stopped out, all you can do is just go back into your next trade and not worry about it. That's something that's done, and move on to the other part of it, and you're going to be fine. That's the main thing. I keep a picture of Mark Douglas right here, close to the office. It's usually on my desk right here, but I'm cleaning my desk this morning, so I moved it a little bit. But it reminds me of all the things that we did together as friends. I met him back in 1986, believe it or not. And we were friends, oh my goodness, for many years. In fact, the reason why he moved here to Tucson was because he liked the environment quite a bit, and I lived here, and he only lived a half a mile away, so we got to share an office and became very good friends, and we traded together all the time. And I remember one day in particular, we were writing the book, the Private Thoughts of a Trader, and that's when I was going through 30 days of trading for Ed Dobson at Traders Press. They wanted to see 30 days of trading, and I had Peggy McKay here over my shoulder. She was an attorney, the trader that lived here in town, and she was doing the writing and going through and putting everything together. And I had gone through a period, I think, of 19 straight days without a loss. And I had all set up, these fabulous trades. I had set up all 5 of them. And I was showing Mark how every one of them was just absolutely perfect. And I was very excited. And he put his hand on my shoulder and he said, "Larry, the streak stops today." And I said, I said, "Why are you starting with a negativity like that?" He said, "It's not that." He said, "It's the tone of your voice." He said, "I can tell you right now that this is going to be a tough day." And I said, "Wow." I said, "I thought you were my friend." He said, "I am your friend." He said, "I'm just telling you what I see." He said, "Maybe I'm wrong." He said, "But this is what I see in your mannerism and in your voice." Folks, it was 0 for 5. It just didn't just didn't work. That was basically it. After the third one, I knew there was something wrong, but I continued to go and do the other 2 and ended up losing that time, but that's the way it goes. Anyway, we'll take a little break here. 877-927-6648. We'll come back and do a little bit more of some Mark Douglas stuff that I think you'll enjoy.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'll pick up on a few things that Mark taught me over the years in just a minute, but I wanted to mention to you something of great significance happened, at least from a Fibonacci standpoint. Last night, I posted the chart of the Dow E-mini, and we went up and we hit the exact 61% retracement of the whole move from down to up, going back to January. So that, I think, is an important thing. Now, the next one that I'm going to show you is the Dow, the E-mini S&P. And if you'll notice, yesterday we were right at that 2763, right at the opening, and of course that shattered it right away. We talked about the fact that if it broke that, it was most probably heading higher. We went up and we made we actually made a new high, folks. We got up to that, we took out the high of June, 2797. So that is that's a new high from the last couple of months. Whether that 61% retracement or not means very much, we'll have to wait and see. But those are the two things that I thought were really dramatic. Now, we didn't make a new high in the Russell as of yet, nor the NASDAQ, but they're not very far away. So, you know, there's still a possibility of that doing it. But the fact that that Dow Jones E-mini at the exact 61% retracement and then broke 100 points may or may not mean something. Right now, we're still trading, we're almost back up to that same level again, which would be up around the 2890 level. So we'll pay relatively close attention to that too. Now, the one of the questions that I always had from Mark was when we first started doing working together, is he would have these traders come in, and folks, these folks were coming in to visit, and they were paying Mark the consulting fee, and he was basically describing what they were doing psychologically without them even knowing it. And that's where he made his real greatest forte was. He could understand the thought process just by talking to someone, you know, where their problems actually were. And most of the problems that these guys had, most of them were very experienced traders, but they always operated under a foundation of absolute trust. And when that trust started to waver, that's where they had the problems. And what he would have to do is to get them to break down their thinking process. In other words, how do they perceive an opportunity? And what was the precise methodology that they used to go back in to do that? And many of these traders were, oh my gosh, they were so totally different. Some were fundamentalist, some were technical, some were seat of the pants folks that just absolutely knew when something was going on. Bob Schmidt, who's a good friend of Byron Tucker, was one of Mark's clients and one of his best clients, and Bob really didn't, he just had a feeling for numbers. I think his numbers were built into the technical picture, but he never looked at charts. He just knew levels extremely well. He never used stops, and but his whole premise for trading was huge wins, and he had some of those. But then on the other hand, he had some large losses, and during those periods where he have large losses is where he would sit down with Mark and try to, you know, figure out what he was doing. And most of the time it was because he wouldn't change his opinion on something, even though he knew that he was wrong. And that's a key thing of trading, is you got to change your opinion. You know, when you're real, you're wrong. That's for sure. That's something that you really need to do. But all these traders had different things that they looked at, but most of it was based on this foundation of trust. They've been doing it for years. They knew how to make money. They knew how to take it out of the money consistently, and they were able to follow a certain set of rules that you know was able to build their trust up to get the consistency that they were looking for. None of them ever believed in perfection. I mean, they were expecting to lose. In fact, it was something that they perceived as being absolutely normal. That was nothing wrong. But by the same token as when they were right, they were really right. In other words, when they knew they were on a position that was going to work, that was it. One particular trader, Robert St. John, who was one of Mark's very, very dear friends, was a fabulous bond trader. He traded right next to Tom Baldwin in the bond pit, and he traded with me in Pismo Beach a couple of days, and he made over $400,000 on one of those trading days. That was trading off the floor, in Pismo Beach. He was trading 100 and 200 contracts of bonds in a market that was, moving almost a full point in one day. And that's the kind of money that they would pull out of the market. So these were some of the things that Mark had worked on, to get to these places where you see all the things that he did. And when you see one page of written material from Mark Douglas, that is basically, folks, about 10 pages of writing. Paula, his wife, has, oh my gosh, I mean, boxes of materials that she's going to be able to bring to us in the future of things that he worked on that he wasn't quite perfect about. I mean, he really wanted everything to be perfect. And some of the stuff that he didn't print, I thought was just absolutely terrific. And anyway, that's neither here nor there, but that's what he worked on, the psychology part of it. He interviewed these folks. They shared religiously what they were doing. They would bring their statements in. They would go, some of the things, of course, were beyond my earshot because it was personal, and they would go into the other office and go over some things. But most of it, we sat down and shared, and we would go to dinner and talk about trading and stuff. But that's how Mark, worked, and it was really a great thing to see him do it. And fortunately, I was, involved in it because we were working in the same office, and when there was nobody here, it was just he and I together. So I would be the guinea pig, and he would certainly, go over the things that I was doing right and, what I was doing wrong. But it's a game of mental manipulation, folks. Trading is 95% mental. He always used to tell me 80%, and later on, I think it was a little bit less. It's more like probably 95%. Because if you can get your act together, get worth that a 9-inch cycle between ear to ear, the rest of it is relatively easy. So you got to remember that when Tom O'Brien does his show every day, he talks about these wonderful positive things, but what you believe you will experience. There's a little book called As a Man Thinketh by James Allen, and it talks about how you think about what you want to do, and that basically is the reality of what actually happens. I enjoy this movie by Mel Gibson, which is I forget, Braveheart, and his saying in that the coward dies 1,000 times, but a brave man dies but once. And the same thing in trading. You got to put your trade on, put your stop on, move on, and go on to the next trade. It's pretty much that simple. What you've got to do is have that belief system that you're going to be okay no matter what, no matter whether you take 6 or 7 losses in a row. And those are going to happen, folks. There's no question about it. By the way, someone's asked a question about the November soybeans. Yes, we did get down to that 78% Gartley yesterday at 861. So far it's held. We're trading at 873. If you were to buy those last night, hold on, put your stop at break even. The same thing in the soybean oil. It pulled back right to it. The coin didn't quite get low enough, but the bean oil and the soybean, both November beans and December oil, really lined up perfectly. Whether they're going to continue that way or not, we'll be able to see. I'll share with you a long-term chart here on the bean oil and the corn when we get back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I posted the chart of the long-term monthly soybean oil chart. You can see how it went down to that 78% level again at 29, where so far it's held. It's had a little tiny bit of a rally from that level. If we take a look at another one that we talked about yesterday, on Friday, and that is the corn market. You'll notice here on the long-term monthly corn chart, this is going back over the last 3 years. We have a 1-3-5 pattern. Each of those higher bottoms is very, very important. That means that 350 level in the corn should have held. So far, it's certainly done that, so we need to pay attention. Whether this has anything to do with the tariffs or not, folks, I don't think that it does. The reason why is the amount of money that they're talking about with these crops is really a rounding error when you're talking about trillion-dollar economies. The second thing is people are not going to stop eating. Every day when I look into the mirror, I can assure you that that's not going to happen. So it's very interesting here to see what's going to go on with these things. Now, whether the stock market is going to react from these levels, remember it's a market of stock, not a stock market. And we have not made new highs yet in the Russell, even though we came very, very close yesterday, and also the same thing in the NASDAQ. So we need to watch those. Now, the NASDAQ is much weaker than the Dow Jones this morning because they've been taking turns, one day strength, the other day weakness. So keep an eye on that. The next one that we're watching very, very closely, of course, is the gold market. Now, last night the gold made a 50% retracement of the whole move. We went up $30. We came down a little bit more than that. We came down $20. So we went just a tiny bit below the 61% retracement, and now we've been able to rally back. We need to get gold to close above the 1263 level, and then I believe you're going to start to see a pretty good rally in the gold market. Remember, the seasonality of gold for July, August, and September is the highest of all 12 months. We got this from our good friend Bill Meridian from Cycles Research in Vienna, Austria. So we'll watch this very, very closely. Someone's asked a question this morning about the Treasury bonds. We're trading around 45.01. The high was 46.12. We felt that was going to be a high. We posted that in the newsletter, of course, this week. And it looks like that might be the high. We're down more than a handle from that level, but rates look like they are going to go higher. The euro has, broken down. Let's just bring that euro chart up so that everybody can take a look at it, and then we don't have to speculate on what we're looking at so everybody can see what we're seeing. And there we go. We'll get it up here. Yesterday, the euro went right up. In fact, this was almost when we were on the air, went right up to the 78% level at that 117.86. The high was 117.90. We're now trading just a tad above 117. There's some pretty strong support at 116.60 in the euro, but basically that dollar index appears that it held a major support that we were looking at that 93.50 level. And as long as that holds, I believe we've got a further rally coming in the U.S. dollar. Folks, when you listen to the news with Bloomberg or CNBC or even me or anybody else, you got to remember these are opinions that people are giving you, and you're the one that has to take the responsibility for the information that you take in. So take it all with a grain of salt, and that includes this market technician, because I'm wrong a lot. Sometimes I'm right, but I'm also wrong. You have to be able to determine, when that is. I try to show you folks when I'm wrong because it's very important, because when these patterns fail, they're most probably going to go to the next level. So we need to watch it, relatively closely. Now we went as high as 1267 in the gold. We went down to 1247, so we were down $19. The harmonic number is 17, so it's very, very close. So the $19 retracement back should give us a $12 rally, which would take us to 1259. Now, if we can exceed 1259, and so far we've been 1256 in the gold today, if we can exceed 1259, then we have a chance to assault that 1263 level. Above 1263, I think you're going to start to see some bullishness. Now, we had a question about the copper. Copper had a big move yesterday off of that bottom that we're looking at 1279. All we did last night in copper was make a perfect 61% retracement down to that level of 283 a pound, and we've rallied from that level so far. So that's another one that is lining up, that looks like it could be very, very important from a technical standpoint. So that's the main thing that you want to sort of keep an eye on as we watch some of these things. I noticed that the soybeans are actually moving up another couple cents so far. Now we're up about 20 cents from the bottom that we made down at that 78% level at 862 in the November beans. We're up 18 cents. There again, we're right at the harmonic number in soybeans. That's 18 cents. So we're at a key level now at that 880 level. If we can get above 883, that's going to tell us that we're most probably getting ready to move. Now, we've had a really strong move this morning. We've rallied 10 cents basically off the opening, and that's usually a pretty good sign. So we need to watch that with a great deal of interest anyway. So we'll keep watching it very, very closely. Okay, now those are the main ones. Crude oil. Crude oil is now setting, folks, right now as we speak, we're setting at the 78% retracement on the whole move from the high we made back about 2 weeks ago at 74.60. We're setting right there. The high has been 74.66. We're trading at 74.58 right now. That is right at the 78% level. So if we can get the market above 74.75, all I do with that is I take whatever that number is, add 25 pips to it, and that gives us an idea of where we would stand as we look at some of these. So very, very critical level in crude oil here, because if it's going to fail, it's going to fail from right here. And anything above 74, 75, 74.80 would tell us that we're probably getting ready to make a new high. We're seeing a big divergence between the gasoline futures and also in the heating oil, but the big daddy rabbit, the leader of the pack, is the crude oil. So that's the one you have to look at. And August crude is trading at 74.57 with a high of 74.66. So we're right there. So pay relatively close attention to it. Well, anyway, we've got the NASDAQ selling off, actually quite a bit compared to what the Dow's doing. So whether that's going to be the leader or not, we'll have to wait and see. We did not make new highs in the NASDAQ. We came very close, but we did not quite do that. So we'll watch it. Now, the Dow Jones, we made a 61% retracement. I posted that. That came in. In fact, we tested it again just a little while ago at 24,885. So, and we're just 30 points below it, so not really much happening there. But if we can get that above 24,950, then we got a chance for higher prices in this. Remember, we had a 330-point move in the Dow Jones, folks. What that sets up, I mean, it's that simple. The down move will be 500 points because 1.618 of 330 is 560. So you're going to see a move to the downside sometime in the next 2 weeks or less. It's going to be at least 1.618 of that move. That's just how the market operates. So get ready to see that when it happens. We'll see, when it's going to happen. But remember, when it happens, we're going to talk about it because these markets repeat over and over again. Dr. Lowe proved that in his book, The Non-Random Walk Down Wall Street. So 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to have Norm Winsky as our guest tomorrow. He gave us some key times to look at today, and we'll put his feet to the fire to see how they worked tomorrow. And also, we're probably going to have one other guest later in the week. It's going to be a surprise guest. I'm really close to getting him on. The $64 question is whether the timing is going to be spot on. So we need to take a good look at that. There's a lot of news coming across from London about what's happening politically over there. That's affecting the British pound, but it's not moving very much, folks. I mean, it dropped 150 pips. Came back retraced more than 100 pips of that. So there's not a lot going on over there. That the markets, and you can see the FTSE has been rallying. So these markets are basically taking the tariffs and the political stuff, pretty much in stride, at least for now. Whether that changes or not, we'll have to wait and see. What I find so hard to believe is to see the venom that's in the people's minds in both sides. It's just really scary that we live in a country that's supposed to be full of a lot of love, but boy, there's some of it that's not working the way we wanted. Let's get off the soapbox, Larry, and not worry about it. Let's take a look at this gold market one more time. We've got a chance here for gold to run. Let's just get this up to look at it. We need it to get it above that 1283, above 1283. I think you're going to start to see a pretty good run in gold. So that's the key that we're looking at. When you see this gold, it's completed the big ABCD structure going back to last August. We know that the cyclical nature of this during July and August is very strong. You look at July and August of last year, folks. It went from 1210 all the way up, rallied $150 into end of August at 1364. So we could see a move very similar to that again, and we'll watch it closely. But the key figure is to watch that 1263 per ounce. We get above that. Well, actually it's 1267 per ounce. That will tell us that we're on our way. That's it. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!